China's Financial Futures Exchange started accepting account applications for index future trading this morning. For the first time, Chinese investors can profit even from a falling stock market. It has been in the works for a while, but our Dai Tian reports investors don't seem very anxious to jump in right away.
People started applying this morning at 124 appointed futures companies across the country. 18 of those companies are here in Shanghai. Applicants have to bring their ID cards, personal credit records from the central bank, and a debit card with no less than $500,000 available. They also have to take a written test on basic knowledge of index futures trading. The managing director of one of the city's biggest brokers said investor interest was about what they had expected.
Most investors come for inquiries, and many call to ask about stock index futures. So far, we've only had 10 applications. The whole process will take 2 days before clients get their trading account.
In fact, trading is not likely to start until next month. When it begins, investors must put up 12% of a contract's value in order to buy or sell short the index futures as collateral, and they are limited to 100 contracts.
That high threshold keeps the majority of retail investors out of the transactions, and that's what the regulators want. Futures are much riskier than stocks because you can lose all of your investment. So we expect institutional investors to play a major role and individuals to stick to stock trading at first.
The contracts are based on the China's CSI 300 index, which is composed of blue-chip companies such as ICBC and Sinopec. Analysts expect a short-term rally as investors hedge risks against possible losses in the stock market. On the first trading day after the Spring Festival holiday, the two mainland markets performed quite weakly, with the Shanghai Composite dipping 0.5 percentage point and the Shenzhen Component Index down slightly more. Dai Tian, ICS News.